Hello, everyone. So, we're going to be talking about cash and cash equivalents and bank reconciliations. The first spot we're landing here is with the bank reconciliation. Now, this particular reconciliation has a lot of information and data in it. I wouldn't give you a problem like this on the test, it would take far too long. However, sometimes the details are necessary to paint the picture of what really and truly is going on and to get you to understand what a bank reconciliation represents. Okay. So let's look at this company, Frankel. It is doing an end of the month reconciliation for its bank account on February, and they manufacture and sell technology related inventory to retailers. So they're a manufacturer selling down the supply chain to retailers. And we have the following information regarding outstanding checks and deposits in transit. So first, we need to be clear in terms of what is an outstanding check, what is a deposit in transit. An outstanding check has been written by the company, not yet cashed by the payee. So the payee is the person that we're making the check out to, right? We're the payor in this case. We write a check, we're the payer. We're assigning that total to a certain entity or person, right? So these are my list of payees, which are just basically, two of them are, no, actually, only one is a vendor. We got a utility company that we pay our utilities to. We have an employee advance. And also, we have a freight company that distributes some of our products to the people we sell them to. When this has happened, when we write a check and has not yet been cashed, understand that we have credited the cash account. So when we write any check, we automatically credit our cash account to show the outflow of cash and to keep our company's cash ledger up to date. Now, deposits in transit are checks written to my company that I've deposited, but have not yet appeared in our account, in our bank account, right? So perhaps we made an e-check deposit, deposited it and uploaded it to our bank account on Sunday or after banking hours or over a holiday weekend, right? So there's reasons why this might not yet be in our account, but we have made the deposit. So these are checks deposited, but not yet recorded in checking account. Now, when we receive a check, and definitely even before we've deposited, but definitely by the time we've deposited the check, we have debited the cash account. So we debit that cash account when we receive the check, we credit the cash account when we write the check. And that is very important because this gives us some perspective as to why we have to settle out these items the way we do in a reconciliation in order for the reconciliation to balance correctly. So let's talk just real briefly, taking aside from this problem, and talk about that reconciliation process. And you really do need to watch the foundational videos from the playlist or read through the book before kind of involving this chapter because I'm going in a high level summary here. But basically, there's two sets of information. The set on the right we'll call the bank's information, and the set on the left we'll call the book's information. And this is a Venn diagram, kind of helpful in visualizing sets, right? So the circle on the left presents everything that the books know. The circle on the right recognizes everything that the banks know about. And clearly, there's a lot of intersection here, right? These are the knowledge points that are held in common by the book and the bank. Now, while there is a lot of commonality, there's also these two sort of crescent moons on the side, if you will, crescent moons, that recognize that there's information that the bank has, but that the books don't over here, and then information that the books have, but the bank doesn't over here. So, what is the information that the books have that the banks don't? The books know about outstanding checks. They also know about our deposits in transit. The books know about it because we've already debited or credited the cash account for both of these items, but the bank has not yet updated the account. In the case of outstanding checks, it's because we wrote those checks and credited the cash account, but the person we wrote them to hasn't deposited the check. And so our bank is unaware that that check was actually even written until the payee deposits the check, and then it clears our account, withdraws the balance of the check amount. The deposits in transit we know about because we debited the cash account when we received that check. But again, it has not yet cleared our account at the bank, and so the bank is not updated for that. The bank, what does the bank know, but the books don't? The banks know about any NSF checks deposited by my company. So if a person writes a check to my company and there's insufficient funds, that's what NSF stands for. If there's insufficient funds to pay off that amount, then our bank will let us know. And the cherry on top, they'll charge us a fee for that as well. So the bank knows about NSF checks. The bank also knows about interest revenue. Right? We could kind of get a crude estimate of our interest revenue, but the bank is keeping a much more detailed accounting of our interest revenue because our balances are shifting all the time. And so they're not going to give us interest when our balances are shifting. They're going to only give us the amount that is there on a particular day earning interest. So they have a much more accurate calculation of the interest that our account is accruing. Finally, they also know about any fees. That could be fees because when we deposited an NSF check from our customer, it could be a fee from an overdraft that my company wrote a check when we didn't have a balance of funds. It could just be any of the many fees associated with holding a bank account. Some of that is an overdraft protection fee. You can get fees if we're talking about a savings account from withdrawing too many times from a savings account. So there's a lot of things that could happen there. The goal of a reconciliation is to add what the bank knows, but the books don't, to the book's information. So we want to add this little half moon circle over here. And we're going to add, of course, any interest revenue to this side of our information set. We're going to subtract any NSF checks that we recorded as a debit, but then it ended up our customer did not have the funds to pay. And we'll also take away and deduct any fees here. So once we do that, we'll have a more decent idea because now we've added this little crescent to what the books know. Now, what the banks don't know, but the books know, also needs to be reconciled. We want to subtract from our bank balance any outstanding checks because they will clear when deposited, and when they do, they'll reduce our balance. We need to add any deposits in transit because, again, they will clear, and when they do, it will increase our balance. The only item that's left are errors. If the book creates an error in their set, anywhere in their information set, we have to then add or subtract, depending on the nature of the error, any book error. And then same for the bank. If the bank makes an error and we find it and can provide evidence of the error, then we add or subtract the bank error from its end of month balance. That was one thing that I didn't really cover right here is that all this information here is taken from the end of the month to be reconciled. Okay. So that is going to give us, after we make all these adjustments, take the ending book balance, the ending bank balance, add and subtract all these adjustments from each side. That will give us a post-reconciliation balance, post-rec balance. That will be equivalent between the two because now both parties should be fully updated with all missing information so that rather than having these two circles which overlap in just this one area here, they will overlap in their entirety once we add all that information together. Okay, so that's the general idea of what is going on with a reconciliation. Now, back to this piece. We have very explicit, specific information about outstanding checks. Notice though, this is the information about outstanding checks from January. All of these check dates, the checks were written at the end of January. These were deposits that were made on the last day of January. So this is all information that's not yet been updated to the end of the month. In order to get the end of the month, now we look at our bank statement, right? So we go online, we look up our account information, we look up all of where we started at the beginning of February and then see what happened. Well, first thing that happened looks like one of our outstanding checks cleared. It was Howard Grimes, our employee advance, deposited their check and it withdrew $8,500. So that's an outstanding check that's cleared. Think big tech. It's an additive balance, right? It increased my bank balance by 10,700, which is shown here on the side, 28,500, 281,500 before the check, increased by 292,200. So if you're careful, you'll notice that there's an issue here because think big tech, we have this as a deposit in transit of 17,000, which means we debited our cash account by 17,000. And the bank has only cleared it for 10,700, right? Just the 7 and the 0 transposed. So this is an error. We don't know if it's a bank error or a book error until I give you some context. But just right now, flag it as an error. We have 53,000 come in from Computing Core. Computing Core, yep, that's a check we deposited. The amounts match. It adds. Then we're notified an NSF check, right? The payor, Digital Advantage. So Digital Advantage here was settling their customer account with our company by writing an $8,500 check. Again, we debited that to cash, but we didn't actually get to collect anything because it was an insufficient funds check. Notice what follows right away is the NSF check deduction fee. There's a fee that's charged. Even though we didn't write that check, we deposited it. Our bank will charge us a fee based on the fact that there was an issue, a hiccup, right? This is why companies don't like bad checks. One of the reasons, obviously, they don't get paid too. And we're gonna have to deal with this NSF check in our reconciliation and our adjusting journal entry. Check 1025 from Delios, that cleared 11,100. Okay, so they cashed it. It came out of our account appropriately. Then we have Potency. That check cleared, came out of our account for 17,000. That was the amount we had credited, so we agree with the bank, no issues there. Then these next two lines, I did not want to have 10 to 15 lines of checks written and checks received that were deposited and cleared during the month. So during the month of February, we wrote a bunch of checks. In fact, we wrote, it looks like 12 of them, right? And we wrote them for a sum of $510,000. They have cleared and we're good there. Checks deposited by Frankel. So these were checks made to me, my company, and we deposited them and they are cleared. So these are not going to be deposits in transit, nor will they be outstanding checks because we wrote them during the month and they cleared during the month. And then finally, we have interest for the month of February. That's the bank, the interest revenue that our account has earned during the month. And then convenience charges, maybe, we had an overdraft. We wrote a check we couldn't clear at one point, and it was a $10 fee for that inconvenience to the bank, which left us at this account balance at the end of the month. So this is our end of month bank balance. Because remember, we're always wanting to start with updated information at the end of the month when doing a reconciliation. Now below, I have a little bit of information about the error in the NSF. It says the NSF check was written by a customer to settle their account with Frankel. It has not yet been updated by the accountants at the end of February in the company's ledgers. So we have not recognized that it was NSF by the end of the month, right? That still needs to be done. So we still need to adjust our cash for NSF check. Because remember, when we got that check, we thought it was good. We debited the amount that was supposed to have been paid, the $8,500. So our cash account was increased by 8,500, but our bank account will not be increased by 8,500 until the person who's paying Digital Advantage has the money and we're able to cash that check. And I also inform you that this company has not yet paid its account. So it hasn't been able to get those funds yet. It's still outstanding. We need to take care of that. Now, after viewing the amount of check 1053 and its discrepancy, that was where the error was. The accounts determined that the amount of 17,000 was incorrect. So remember, 17,000 was what we recorded in our books. So we recorded too much cash. Because we should have only recorded 10,700. So because that 17,000 was put into our cash account, we need to update it. Now we can go ahead and sort of figure this piece out. It's a $6,300 differential between 10,700 and 17,000. And our cash account is overstated. So that's an error that will have to be adjusted on our side, on the books side of things, in order to make the reconciliation work. So we have a little bit of every type of information I talked about, the stuff the bank knows, but the books don't, the stuff the books know, but the bank doesn't. There's one more thing we need, because remember, these were just the outstanding checks and the deposits in transit from the end of January. So we have to update that amount. And remember that all of these checks cleared. Well, not all, but 3 of the 4 outstanding checks cleared. Delios came through on 2/4. Potency, that check came through on February 5th, and Howard Grimes came through on 2/1. And so these have all cleared, but we still had one left over, and that check is still outstanding. It is to the freight company, so we keep it up here as an outstanding check. Right? Not all checks will clear during the month. Sometimes it'll take a couple of months, but we have to keep it in our outstanding checks because now these are the end of February that we're dealing with. We also have two other checks that were written during February but did not clear. Right? So those are not part of these here because these were written and cleared, but we have these additional outstanding checks that didn't clear. Then our deposits in transit. We made two deposits on February 28th. Neither of them have shown up in our account yet. So these are the new deposits in transit at the end of February. All right, so that's just kind of setting up the problem. I'm going to take another video where I talk about each of these items that follow.